everybody. Stephen Mead here with Domicile Real Estate for people who love houses. And this is our Southern California housing market update for data through September 7th. So that would be yesterday. And a couple of things this week that I just wanted to go over before we start, and we'll get right into it. Number one is we don't have our complete overhaul on our charts this week. Two things have kind of happened regarding that. Number one, I forgot that it was Labor Day weekend. And number two, we kind of have some other big news, and I don't want to put too much into one video. The second thing is, in fact, that big news. It's finally happening. I've been saying it for months, kind of expecting something, and our market has just been very slow to do something that I expected to happen, and now it looks like it's happening. So I'm going to not spoil the surprise. I'm going to jump right into it. And in fact, it is in our very first chart here. So let's get into it. Here we are. This is our new listings chart, right? This is what measures sort of the supply in our market. And if we look here in our under 1 million category, I apologize for kind of the faded graphics here. I hope you guys can see this. We have very, very, very constant numbers for almost 2 months. And then there is last week, a holiday week, no less, where we see just this, I mean, really just kind of a 10% jump in the number of new listings in this under $1 million category. I mean, just really, there's no other way to characterize it. This is the most new listings we have seen pretty much all year since we've been tracking. This really is kind of our biggest numbers in terms of inventory in the market. I can't overstate this enough, sort of what a big deal this number is to see this. And again, this is in a holiday week. So we don't see the same effect in our $1 to $2 million range. That one has actually remained fairly constant. I'm going to back out of the share here just because I feel the need to repeat this for emphasis. If you do not listen to a single thing to me this week, I will tell you the one thing you need to know, and that is that the number of houses in the marketplace that coming in increased significantly. And I think that's a trend we're going to see continue, right? And I've got another chart to kind of put this into a little bit of perspective, right? This is a COVID year, and sometimes it's kind of hard to have an idea of, is this anything special or not? But if we move on to this next chart, this is comparing 2019, the numbers the same week, right? Now, mind you, in 2019, the same week was not a Labor Day weekend week. So versus 2019, we are actually up more like almost 20%. 15 to 20% on these numbers. We've been struggling all year long to really match 2019's level of listings, and here we are. And I'm gonna not let you jump to some conclusions because I don't want you to jump to things prematurely. One of the things that we have noticed about this year that's sort of been a trend all year long, and I think this is very important to mention, is sort of this idea of things being delayed, right? Like, so if normally our big month where we have huge price gains was, March or April, well, this year it was June, July, and August, right? Everything was just pushed back a bit. And, I've talked about this trend that seems to happen in our market, in most markets around the country, where you get buyers who enter the marketplace in the spring, they buy up a bunch of the inventory. Now there's a shortage. Prices sort of take like a jump over a 30-day period. And then sellers start to see these houses close. They can't believe what their neighbor got for their house. And there's this sort of rush of new listings hitting the market. I think that's exactly what's happening right now. The difference is it's happening in the fall, which is not our normal time frame for that happening. So let's go look at the other side of our equation, which is new properties that went under contract. So if we take a look at this, and this is arguably sort of our demand side of the equation, again, this was a holiday week that we had. So, we can expect these numbers to possibly be off a little bit, but we saw a drop. And again, this is the fewest number of new escrows under $1 million that we have seen, in 3 months, right? And I think it'll be interesting to see whether next week sort of confirms that or not. This is a back to school week for a lot of people in communities. So, there's definitely some reasons why that might be lower, but you would expect that to be lower on the listing side too. I think there's too much of a temptation of money. People put their house on the market, they don't care. If we look down over here, we even see some slipping in our new escrows in terms of our 1 to 2 million. Again, I want to wait till next week before I sort of call that a trend. But what's interesting here, just to give this a little bit of perspective again, is if we compare this with last year, with 2019, I mean, we're doing really well. Again, in our under 1 million category, we are exceeding last year's sales, by a healthy margin, a little under 10%. That's really great news. And I've got my next chart here. This is our first week closed sales showing 2019 versus 2020. And there's something remarkable with this chart, right? Like, so again, we saw January, February, March. I mean, we were outpacing 2019. Then obviously April, May, June, things started to get better. July, things had almost fully recovered. August, we were just about even. And look at our first week September numbers. We exceeded the sales from 2019. So, I mean, these are very healthy signs. And one of the fascinating things about this is there are some economists that are predicting that in the California market as a whole, that we may actually equal the number of sales we had in 2019. So despite COVID, we may actually completely catch up to that 2019 number. We'll just have to wait and see the next 4 months if that happens, but we are definitely on trend to do that. Our pendings are up. We are on trend to do that from our number of homes in escrow as well. So kind of moving on, and I hope I'm not going too quickly for people. We have our absorption rate, as you might have expected. Let me get out the pointer to make it easier to see. This really plummeted with this number of influx of new listings. These numbers are looking a lot more like some of the numbers that we saw back in April and May. We haven't seen an absorption rate under 1 million this low. Again, I don't know whether this is an artifact of a Labor Day weekend, which accounted for 3 of the 7 days that we had for counting this week. So we'll definitely want to take a look at those numbers next week and revisit that. Our numbers slipped, our absorption slipped again on 1 to 2 million, but not quite as much. If we're looking at pricing, and I mentioned this last week, I have some thoughts on sort of redoing this statistic. One thing to understand is that whenever we make changes to how we calculate statistics, we actually have to look back a few weeks and recalculate those numbers, because many of the statistics that we do, we're not trying to give you an absolute number, right? Like it doesn't so much matter what the pending list price average is, right? Under $1 million. What we really want to know is what direction is that moving? Like, what is the market momentum? And you need to compare that to prior weeks to kind of see what's happening. So do understand that when you look at these numbers, these aren't meant to be absolute numbers. These are meant to be relative numbers to sort of show trends over time. And if we do that, we kind of see what we've been looking at, which is sort of a general kind of flattening of this curve, right? We're seeing a little bit of bouncing around up here, but we're kind of seeing this curve flatten. That's not entirely unexpected. We saw some really big jumps here, right, from April, and then things have kind of settled out a little bit more. That's totally what I would have expected to happen in a market like this. The real question is, are we going to see some further gains and some jumps? If we look here on our list to close ratio, that's still incredibly healthy, right? I mean, we're still seeing that number over 100%, and it has been since the middle of July. And that basically means that buyers are still coming out and they are going under contract on properties, and they are bidding on average above the list price for that property. So still some very interesting information out there. I do tell people, take a little bit of caution, because you do have to remember that this statistic is essentially 30 days old, right? We're looking at houses that closed this week, which means they negotiated their deals 30 to 45 days ago. We do run something called our last week stat that appears at this end of the graph. And I usually do that just as a comparison to see if it's trending the same, where I look at all the homes that not only went into escrow in the last week, but also closed. So that number is more current data, but it's a much smaller sample size. So it bounces around a little bit more and it's harder to see. If we look at our $1 to $2 million range, again, we see kind of a gentler curve, but still sort of a generally trending upward number on our average pending list price. Before I go on, I've talked about this a couple times, and it is really important to remember, we sort of look at these statistics from a couple different angles. People always want to know, like, what is the one statistic that tells me what's going on in the market? And, it's really foolish to play that game. And the reason why is there are a lot of things. There's no perfect one statistic. There just isn't. I wish there was. It would make my job easier. These videos would be short. I wouldn't have to run that much. I wouldn't have to run that many stats, and the numbers would be simpler. But they aren't. And the reason why we run these kind of corroborating stats is because we're kind of looking for a trend, right? We're looking to see, do we have noise in our data, or is this the start of something big? I do think that just given the magnitude of that listing volume jump, that's a sea change in our market. I don't think that's going to be a one-time single deal. I think that's going to continue to kind of be this new normal. People are seeing what kind of prices their neighbors are getting, and they're putting their houses on the market. However, one of the other reasons why we run these corroborating stats is, we want to make sure that we're just not being misled. And one of the ways that we do that is with average days on market. Because if a market is slowing, we immediately start to see that days on market trend start to hit. And I'm really curious to see, where that's going to go next week. But for this week, if we take a look at this, I mean, we are still very much in what I would consider a hyper competitive market. When you have days on market below 30 in any price category, and we see it continue to drop even in our 1 to 2 million, this is a hyper competitive market still. I think the difference might be is that a month ago, you might have had 5 offers on a house, and going forward, you might only be competing against 2 offers, 2 other buyers on a house. Still a very competitive market, but not quite the same level of hyper competitiveness maybe that we saw a month or 2 ago in our numbers. Finally, I want to bring out a chart that has really become sort of a fan favorite, and that is our sort of affordability index. And, I'm going to bring that forward here. And again, kind of, I don't think I've mentioned how we calculate this really quickly. So what we do is, this is the payment on a median priced home in Orange County, single family and condos together. And we take the payment with 20% down. And what we do is we normalize that from June of 2018. And then we kind of look at, are we higher than that number as we were in September of 2018, or are we lower as we are this week? And we're hovering right around that 91%. And you'll see that seems to kind of be the place that this market has settled. We have one bit of kind of a jump here, almost to 95, but by and large, this has been a pretty stable number month to month. And, I think that really says a lot about our market. And what that is saying about our market is it's telling us sort of the price point that consumers are comfortable. And that's not price point meaning the dollar amount for the house. It's price point meaning how much does the house actually cost to own on a monthly payment basis, which is generally how most consumers make that buying decision. So, people will stop me on the street and they'll ask me, right? When in casual conversations, they'll tell me, I keep expecting home prices to go down. And I say they have gone down. And if I pull this graph back here, I can prove it to you, right? Home prices were at this level. Now they're about 10. Now they are at this end of the graph, they are about 10% less. And if you factor in inflation, they're actually more like 15 to 16% less than they were 2 years ago. But that also means something else that's interesting. And that means that I feel like a lot of our market right now is being driven by low interest rates. That always makes me a little bit nervous to know that we have sort of one factor that is driving our market. What's going to happen should those rates move? And so I tell people right now, if you are a home buyer, I have some good news for you this week, right? You've got 2 pieces of good news. Good news number 1, if you're a home buyer, is if you are worried about selection of homes and how hyper competitive the market is, things got a little bit easier. You're getting a little bit of relief. I don't know how long it's going to last. It might not last a long time. Spring 2021 is not that far off. So, if you're a home buyer, but for today, I have some good news delivered to you. And then the second thing that's great if you're a buyer in the market today is sort of the insane interest rate that you get on a house. And remember, if you so choose, that rate is for 30 years. We are one of the only countries and places in the world where you can even get a 30-year fixed rate mortgage. It's really a wonderful thing. And I think a lot of people don't understand what a huge asset that can be, like maybe 10 years in the future if we enter a higher inflation environment. if you are a seller, here's kind of how the market is changing for you. The great news is there's still more buyers out there this year than there were last year, and they're buying more houses. Yay. So if you're a seller, you are still way better off selling this year than you were last year. If you're a seller who is moving up, you have a lot less anxiety about the house you're going to buy because there's a little bit more inventory. But there is a flip side to this, right? And if you're a seller, that means before, I think you could put if you were in a neighborhood people wanted to be in, you could have an outhouse and put a sign in the ground and you would get multiple offers. I don't know if that is going to be true in the next 30 to 60 days. I think if you're a seller, you are definitely going to have to put a little bit more work in. You want to be one of the more attractive homes of the market. I think the attractive homes of the market are still going to continue to get multiple bids. The other homes that are in that sort of bottom 50% of desirability, I don't know what the story is going to be with those houses going forward. They may have to be a little bit more price competitive. So, if you're a seller, that's kind of my advice this week is don't take that your house will just sell for granted. You need to prep it. You need it to be the most desirable house, and you will still get people fighting over it. The buyers are out there, but you really can't take that demand for granted. Anyhow, thanks so much for listening. Like, subscribe, do all those usual things. We love comments and questions, and we will see you next week. Oh, before I forget, do not forget on Friday, we also launch our affordability and availability analysis that is just for first-time homebuyers. So we actually look at a segment of the market and at lower down payments just for first-time homebuyers. We hope to see you there on Friday.